Hello guys, it's been a couple of months actually since the last episode of the series, The 5-Figure Escape. We're back today. We're going to talk about what I've been up to, what I think about the market, some of the things I've been doing, and of course a portfolio update. So without further ado, let's jump straight into it. So yeah, it has been a little while. The last time that we actually did any episode, we were at around 6.5k. This was back at the time when the market was doing still okay overall. AI agents were still doing all right. There were altcoins that were still performing pretty well overall, but we were down a bit. So perhaps the top of the cycle was in, and I think that's kind of why on screen you can see we were actually down about 36% from the initial 10,000 that we started off with. Since then, I think many of you watching are well aware of what's been going on in the market. You guys are generally fairly in tune with that, and you know that the S&P, or the market as a whole, I should say, not just the S&P, but also Bitcoin, crypto assets, everything, right, has had a bit of a tricky time, and you can see this clearly that from this point that I've highlighted with the S&P 500 going down 21%. A really good trader of mine, a really good trader friend of mine, actually wrote this thread really talking about calling the top of equities here, and this was back in February, basically at this point right here. So really absolutely nailed it here, talking about a whole range of different factors, including US household borrowing, basically the ETF outflows, retail investors just not buying certain different assets, inflation, consumer loans, margin debt all-time high, gold being at all-time highs, PE ratios being at all-time highs, and just a whole range of other kind of elements as well to really try and call this. And yeah, it was bang on right. We saw what's going on with Trump and the ongoing tariff wars, you could say, and ultimately that's led into some horrible price action for even the likes of crypto assets as well. And we can see Bitcoin here, which topped out at 107k or 109k, I should say, back towards the end of January, and since then has been on this downtrend. Now recently things have kind of taken a little bit of a upturn, or uptrend I should say, in the last week, but it was only a week ago that we were trading at the low 70s. And as you can imagine, for pretty much every altcoin, it's been very brutal. In fact, altcoins season index is back at 14 lows that we haven't actually seen since the middle of summer last year. So, pretty big pullback here, this is interesting because at times this has been good times to accumulate. I don't know if we're kind of at that phase just yet, but maybe we are. Fear and greed index as well has been at extreme fear, or even fear, for the predominant nature of the last 1 month as well. And we kind of have Bitcoin kind of at these prices now. We were in this range, and this range did break down towards the end of February, and then we're kind of in this new range now where we hit the range lows and actually wicked below it, going as low as 74k, but now kind of in the middle at around 84k. Where are we going to go from here? I'm not too sure, but one thing that is really interesting is that Bitcoin is actually less volatile than a lot of the stocks that we have right now. This is just looking at the 10-day volatility average across these different assets, including gold, oil, bonds, but interestingly, Bitcoin being less volatile than the S&P and NASDAQ, which is interesting. Just, of course, recent price action, So the question is, what have I been doing? Well, from this video, what we did was we actually did end up stabling up a lot of it. Fortunately so, because pretty much the vast majority of these AI agent coins have pretty much gone to zero. And so, yeah, it was just a case of preserving what was available or what was left. And so we are down still just under $3,000. However, there have been some things that have helped us in this time period. A few of them being the stables that we have had, or were able to get out of these AI coins, even though we were down quite bad on them. We were able to start farming with them. And we were able to accumulate a little bit of IBGT as well along the way. Nothing too crazy. We're talking about $800 worth, which we actually got for a little bit less, maybe like $600 worth in total. And then on top of that, we were able to get a little bit of an airdrop from Ooga Booga. Now, I've talked about Ooga Booga before. I'm sure many of you have watched this deep dive video that we did, really covering covering it in a lot of depth. And I think any one of you who have been using Berachain have 100% used Ooga Booga, and so therefore have been eligible for this airdrop. Now, the great thing about this is actually Ooga has actually been the outperformer of the entire market right now. You can see that very clearly here when you look at this chart and see its performance over the last couple of weeks since the airdrop came out. It's currently trading at all-time highs as of right now. So yeah, the great thing is we didn't actually have to buy any. It says average price here 10 cents, but that was just the launch price. We actually got all of this as an airdrop, and so this has mitigated some of the damage, although we are still fairly down from the initial 10,000 that we started off with. One of the great things about Berachain has been the yields, and so the yields are compounding every single day. Now, we have been able to accumulate quite a fair amount of IBGT so far, and I think that's also been really helping us to accumulate more stable coins right now, purely because of how good the yields have been. At times, this has been close to 400%, 350% APR, essentially giving us over 1% a day back in returns, which has been pretty huge. And I mean, at these rates, 200% APR, we're still kind of able to make, 1% every day and a half, or every 2 days, just under 2 days. And of course, this has a compounding effect, which has been really, really good to see. So IBGT has been printing, and that's kind of why we've been able to mitigate some of the damage. And I think give it another 1 month and we should be right back up there. That should give us another 20% or so back, and we could be in a much stronger position, back to maybe $9,000 or maybe $9,500, especially if the market picks up in that time. And similarly, a lot of the vaults that are currently available on Infrared are paying triple digit yields. You've got tons and tons of opportunities here. Some of them stable coin related, or maybe some sort of pseudo stable exposure, the likes of, look here, you can see RUSD Honey paying 87%, or maybe Ohm Honey paying 80%. I mean, these are stablecoin farms paying you 90% APR. Stake Nect again being a CDP stablecoin, 95%. When have you ever found opportunities to earn almost triple digit yields on your stablecoins? Very rarely. And so that's kind of why we are able to really add a lot of cash to the portfolio every single day right now, earning these very high yields. Now, my strategy is constantly changing, and so whilst you might see USDC here, at times it might be RUSD or Nect or Honey or some of these other stables as well, purely because I'm kind of rotating quite regularly to just try and capture some of the best APRs around at the moment. And so as you can see on screen right now, we have some really high APRs. Where do these APRs come from, for those of you who might not be aware? Well, they come from these protocols like Reservoir or Baraboro, essentially adding incentives themselves. And so they add incentives to validators, and validators often return BGT, or in this case IBGT, which trades at a pretty nice premium. And so ultimately that's where the high APR is coming from. Is it sustainable in its current form? Probably not, but this is the capital that these protocols are paying in order to rent liquidity at the moment. And that's often why we're able to accumulate a reasonable amount, and hopefully in the coming weeks and months accumulate a lot more. Now, the market is clearly not risk on right now, and so this really opens up two questions. Given the fact that altcoin season index is so low, is this an opportunity for you to accumulate some of your favorite altcoins, or maybe accumulate some of the assets that you are interested in the long run? Or B, is this a case of just staying on the side, focusing on airdrops? And I think this is certainly one thing that I'm really focused on right now, is focusing on protocols without tokens right now that I can use and utilize to earn airdrops. Now, Ooga Booga was a great example of this, and there are many others as well, the likes of Kodiak and Infrared, which of course we have got some exposure to, but many others within the Berachain ecosystem, as well as many of the others on other ecosystems too. Remember, we have some big chains coming out pretty soon, the likes of Initia, MegaETH, Monad, Movement, all of which will have their own ecosystem, as well as plenty of protocols that will be eventually launching tokens. And so I think for me, part of the focus is spending time within these ecosystems to use these apps, whether they're on mainnet or whether they're on testnet, and really try and get as much exposure as possible for when those token launches do come. So maybe I won't go into them in that much detail this video, because I don't want this video to get too long. But perhaps if you guys are interested, maybe we can cover maybe 20 or 30 different tokenless protocols that I think are potentially worth farming. And that can definitely help this portfolio grow, because I think it's only when we get a little bit higher than where we are right now that we can take some concentrated bets on some alts and really ride that potential upside. So it's been a while since the last one. I guess this is episode 5. We're at $7.5 or $7,354. Let me know what your thoughts are. Hope you are all doing well as well, and we'll be back with another video in due time.